Good evening, everybody. Sandy, Ray, how you guys doing? Guys and girls, can you hear me? Sound check. Always going to have a little sound check. Great. Thank you very much. All right. All right. And my screen, you can see that. We're just cooking right along here. All right. So, um, we're a little early. This, of course, my name is Glenn, and this is the 8 o'clock version of Market Watch. David, good to see you. You feeling better? I hope. Thanks, Ray. David, any better health-wise? You kicked that stuff loose yet? Let me put my disclaimer, not mine, but the disclaimer up here for now. Get it kicked off nice and early. This is for educational purposes only. No recommendations. We know that. Okay. Very good. All right. Better than yesterday. Good. Better's better. Very good. All right. We're a little early. Any questions? I'm here to answer questions. So, any questions before we get started? Market doing its thing. Clint, good to see you. Do you day trade? Yep, I do, Sandy. I was born a day trader. That's it's dearest to my heart in trading. But unfortunately, I don't have as much time to do that now, but still do it when I can. Um, I've morphed more into a swing trader because of time constraints in my teaching, but I still do. I still do both. There was a time when I would sit here for 3 hours and watch my screens and prep for and be, in the market 4 or 5 hours a day. Um, what is the best time to trade? It seems the escalation is happening in the beginning. Best time to trade almost always and universally is the first hour and a half or so of the market when the market first opens. Um, Very often in the afternoon, prices kind of go flat. But first thing in the morning, 9:30 Eastern, that's when things really start to take off. Because remember, you have a lot of orders pent up from the morning. All right, so kind of like today. Here's Netflix. I just happen to have this one up, and here's a big run first thing in the morning. This is 11 o'clock right here. So you have that first run up, and then the market. Let me get rid of this. The market pretty much goes flat for the rest of the day. Now, it's not always going to do that. Sometimes you get a stock in the market and it just goes up all day or down all day. You make it a little pop at the very end of the day. It's possible. But by and large, that first hour and a half, that's your biggest mover. Hold on one second. Let me put this on a new tab. There you go. All right. Dan, good to see you. Um, Sandy, let's see, what else did you say? Thought so. Yep. What times do you use to monitor? For day trades, I use a 2-5-15. I trade off the 2 minute chart, um, and then I look for the 5 and the 15 minute charts to be overbought and or oversold to bolster the trade. When they're all three, or in this case, oversold, this would now, this one's a little, I mean, it's a cheap because we know what happened, but this is the setup I look for. These are floor traded pivots. You can put these on your computer. Support great support and resistance lines. If I see something come down like it did right here, right, bounces right off of that floor trader pivot, oversold across the board. That's where I would look to get in. That's my main trade. Let's see if I can find something that does it after the first couple seconds of the day. Oh, that's what's missing here. Ah, gosh darn this thing. Ay, 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 ay. TradeStation is playing its games with me. Let's see. How about Apple? What else? Let me see if I can find anything here. And you can see Apple, big move. First time today. Now, support and resistance on these floor trader pivots. You can see, boom, resistance, resistance, resistance. Would have been a nice short trade. Um, Let me just take a look on here if I can see something. See what the SPY did. Well, the SPY did it at the end of the day. Yeah, right here. You can see the SPY came down, bounced off it, came down. There was no real trade there, but I mean, you could have traded this, oversold, bounce off the pivot, but you can see how often it does bounce off these pivot lines. Whoop. So they're usually pretty interesting. Yeah, well, listen, just be careful. Day trading is its own animal. Um, you have to be careful with day trading. It's definitely different. Um, get out of here. I've talked to people many times, and they said, "Yeah, I took this day trade and I went to lunch and then I came back." I said, "What? That's not the way you day trade. When you day trade, you're in. If you bought it here, if you bought, let's say you bought a put position right here, overbought at the pivot, and it goes down and down and down. You can't leave that. You got to move. You got to move your stops down. You got to watch it. You can't leave a day trade. So much more time intensive than a swing trade. Yep, absolutely. And then you would have got down here and then put a stop along here and then boom, you get stopped out. But yeah, you got to watch. Now, I will say that once in an absolute blue moon, I will leave a trade open, but I put a OCO and I put a limit and a stop. And sometimes, you come home and not so much here, but let's say I left it here. Let's say, sometimes I just got to go. I got to go to the gym. Let's say I bought a put here. So I put a stop down here. I mean, a limit down here and a stop up here. And then sometimes, you get home and boom, boom, you're stopped out, but you made your money. But that's only in rare occasions. Yeah, I don't use them. Like Anashi candles, I don't use them. They can, some people do. I'm still an old-fashioned candle guy. Um, to each their own. Listen, that's just another type, really just another type of indicator like anything else. And there are, I've shown this many times before, there's zillions of indicators. I mean, my God, gosh, if you go here on TradeStation, and it's the same with Thinkorswim and any broker. Here are the indicators. I mean, these are in alphabetical order, and you can see there are a quadrillion of them. So, um, indicators are indicators. You have to find out which ones work for you. And then these are indicators here also, and there's a few more over here just for the heck of it. So my advice to everybody, don't have too many indicators. Some people, especially first-time traders, think that if one is good, and one is good, this is just stochastic, and I like it. I've always traded with it. I believe it does very well for me as in my trading. And they say, well, if one's good, then let me throw in a MACD and let me throw in an RSI and let me put in a CCI and a little PPO, maybe an ADX. And before you know it, then you got volume at price, and then you got 5 moving averages, and then you throw in a Keltner channel too. And no, sorry, that will never allow you to trade well because it can't. If you got 6 indicators and 3 say go and 3 say no, then what do you do? Again, it's called paralysis by analysis. You have 6 indicators and 3 say yes, 3 say no, and you're paralyzed. You're like, oh my gosh, what do I do? I mean, I don't know. Well, no, you don't know. So that's why it's not better. Simple is better in trading. That's what's better. I will tell you that I've found that over years, and that's all there is to it. Simple is best. All right, I put my simulator up here because Winsome had Shirley, good to see you. Winsome Cap, a couple new names. Welcome everybody. Oh, Winsome's here. Yeah, Winsome. All right. So we can talk about if I understand exactly what you're saying. I believe what you're saying is, let me see, let me put this on a daily chart. So let me find a good example here. Let's go down here. So let's just say you were, and a day trade, swing trade wouldn't make any difference. Let's say you were in a swing trade. It's not where I want to be. Tell you what, let's go to well. So you're in a swing trade, and let's say you bought this. And I believe what you're saying is, how do you move your stop up in order to get stopped out? Or are you saying, where do you want to move your stop to get out of the trade? Wasn't exactly sure what you were saying. I mean, moving your stop up is easy enough. There's no problem there. But if you can win some, if you can tell me exactly what you were talking about in your question, we'll do it right here. We'll do some real-time trades and we'll take a look at it. Stephen, good to see you. All right. So, oh, Winsome, yeah, throw something in there. Let's take a look at the market real quick. My watch list has disappeared thanks to TradeStation. So, I don't have to, I don't need it, but it's always nice if I had it. And of course, my lines are all gone. Now your mic's off, Winsome. Let's see. All right, so where was my support level? I had one down here. All right, so anyway, shame I had my chart marked off. I had the highs and the lows. Trailing stops. Listen, let me give you a word of advice. Don't use them. You don't need one. Um, you really need to trade what you see on a chart. If you want to maximize your profit potential, you need to trade what you see on a chart. If you get in a trade and move your stop up underneath each one of these lows, you're going to do much, much better. There's your support. Boom, you're out of the trade. I have never used a trailing stop. Again, I kind of make fun of this all the time. And to each their own, if you really wanted to. But people say, well, I'm going to use a 10% trailing stop. And I say, okay, why not a 8%? Why not a 6.2%? Why not a 12.5%? Why not a 15%? There's nothing magical about 10%. There's nothing magical about any number for a trailing stop. And all you need to do is every morning before the market opens, you take a look at the trade and see what it did the night before. Put your stop below the low of each day Now, it's not always going to work like this. I mean, this was, tremendous. This was a tremendous 14-day run, but still, if you had it here, you put your stop under here, you put your stop under here, you put your stop. These are support areas. You can see there's clear support here. There's clear support right here, clear support right here. And then you move it up now when there's no support. Maybe you move it under this day, then you put it under this support. All right, and then maybe under here, and then boom. Now you're never going to get the exact top because you're moving your stop underneath the price, but the trailing stop might stick your stop here and you get stopped out. And I put it here where, according to the chart, it has its high. I was going to say where it should be, but according to the chart, it has its highest probability of being as correct as it can be. We never know for sure, but we have tremendous support here. I would put my stop underneath. We have tremendous support here and here. These are places. And if I was coming up from here, I would have, well, that's a different story, but this is the way I trade because I trade the chart. Thanks, Bob. Good, good, good. Sandy, good. I'm glad this helps. But just a random trailing stop will often get you in trouble and not allow you to take the full profit. You don't need to watch all day. How many people can't? There's no doubt about that. But um, once in the morning before the market opens, take a quick look, see where it's at. And if you put your stop under here, you wouldn't have to move it for 7, 8 days, right? Then you move it under the low of the next day and the next day because these are nice moves. And then you could put it under there if you wanted. And then you put it under these 3 bars because they have support right there. The lows are very similar. Move it up a little bit, and then boom, you get stopped out. So I've never been a fan of trailing stops. Well, yeah, you can use, if you use a stop, right, then you're using a stop market, sell stop market. Um, I'm not a market guy. I'm a limit guy. I would put in a price right here, sell stop limit. So it only hit it if it hit this price. That's where I'd be at. Um, or you could just put in, if you were down here, let's say this was $6, you could put a sell limit here at $7. That's the least you're willing to take. And then if it hit that, you'd be stopped out. But markets, I'm not a market guy. I don't want the market to tell me what price I'm going to get. I want to tell the market what price I'm going to get. All right. So I'm always trading the price on the chart. I'm always trading the candles, the patterns, the support and resistance on the chart itself. Very good. All right, good. But what if it keeps falling before it closes? Mm, well, I mean, if it closes, if it falls below your stop, you'll be stopped out during the day. But wherever it closes, let me get rid of this mess. There's too much stuff here. But wherever this closes, like on this bar, if you had your stop under here and this little bar went all the way down here and went lower, it would stop you out. But if you had your stop under here, you always want to give yourself a little cushion. If you had your stop there, then you would not have been stopped out on any of these bars. All right, good, good. Absolutely. Yep. Sandy, you're absolutely right. I mean, there are a lot of different ways to trade, a lot of different setups, a lot of different ways to manage the trade. Everybody talks about the entry. Entry's fine on all trades, but of course, you have to have an entry. But what happens once you're in? The management of the trade is essentially, exceptionally important. Where do you put your stop? Where do you enter? That's fine. And then how do you manage the trade once you're in it? These are things that you can practice once you're in the paper trade account. I mean, you can practice them in real time too, but this is great. This is what paper trading is about, guys. Don't overlook the absolute necessity and amazingness of paper trading. Paper trading, again, is just like the driving range at the golf course. You'll never, if you ever see, I don't know how many golfers there are here, but if you guys ever watch a golf tournament on television, these guys are the best golfers in the world, just like in any sport. And if you see the leaders, remember, the leaders come on last. The guys with the best score tee off at the end of the day, the last of, not the end of the day, but the last ones to tee off. And on Sunday, especially, they'll show you when they're waiting to tee off, where are they? Are they sitting at the bar with their feet up? No, they're at the driving range. They're out there with their coach hitting golf balls. These guys only hit 5,000 golf balls a week before the tournament. Even on Sundays and Saturdays of the tournament, they're on the driving range hitting 50, 75, 100 golf balls. And then they go to the sand trap and they hit out 50 sand traps. And then they go to the putting range and they putt for half an hour before they play. Yeah, exactly, Dan. Why? Because that's where they got to make sure that everything's right. They want to make sure their swing is correct. They got a guy watch them usually, and they hit golf ball after golf ball, and they're hitting. You're looking at the guy and you're saying, "What the heck is this guy hitting golf balls for?" Every single one of them is going right down the middle of the fairway, 300 yards. Well, they want to make sure that they are in the groove. And if there's anything wrong, maybe the day before they hit a couple weird shots or a couple errant shots, they're going to go to the driving range the next morning and they're going to figure out where those weird shots came from so they don't happen again. Yeah, they own 10,000 hours to master. Absolutely. Look, trading is a skill. Playing golf is a skill. Playing tennis is a skill. Football, baseball, basketball. These are all skills. If you read bios about the best players in every sport, the common thread through all of them will always be that they practiced more than anybody else. Jordan, these guys, I remember, I forget who it is, what basketball player, it might have been Michael Jordan, but I can't remember exactly who it was, would throw 800 free throws a day. Tiger Woods, when he was number one in the world, I read an article by Butch Harmon, who was his coach, and then Hank Haney was his coach. When Butch Harmon was his coach, Tiger Woods practiced 50 hours per week. And this is when he was number one in the world after he started playing golf when everybody saw him when he was 3 years old on Johnny Carson. Tiger Woods, listen, if you read these guys, their bios, they'll tell you that everybody has talent. Everybody. The greatest players in the world have more than talent. They have the ability to practice tremendous amounts of time and usually more than anybody else. They're the ones that rise to the absolute top. Very good, Sandy. Yeah, that's very good. Yeah, hey, listen, win something. Let me just tell you, here's a rule that you can write down and stick it on your computer. Never let a winner turn to a loser. Never let a winning day turn to a losing day. Oh, that's why you have to put in stops. Even if this was a day trade, you got to put in stops, protect your profit. You never know when it's going to turn around. Don't let that winner turn to a loser. Boom, you get stopped out. Adios. That'd be a beautiful trade, even if that was a day trade. Never let a winner turn to a loser. Ah, yeah, yeah. It's tough when you're at work, but you can put in an OCO. You can put in a sell stop limit and a buy stop limit, sell stop limit on the top and a sell at the bottom. in case it goes against you. You still have your sell limit and then your sell limit at the top. So if this was a day trade, you would, if you bought it here, you put a sell here and then you put a limit here. That's, you can do that. It's not the best, but I mean, obviously, if you're working, you got to go, you can't stay. And sometimes, and I know when I worked full time in the casinos, I guarantee I couldn't look at the computer or my phone. That's for sure. And there was none of that. Well, if you had a trade on, like sometimes when I have a trade on, I put a stop here, sell stop, and then I put a limit. So let's say it's right here. And I say, well, gee, I've got resistance right here. And I say, well, right now the option's worth $5, and I know this is $3 on the stock and it's got a 50 delta. So I put my stop at $6.25. And if it reaches that, that's my sell limit, I'll take it. But if it goes against me, then I'll get stopped out here, or I could put my stop here where it is when I leave to go to the gym. There's all kinds of things that you can do with OCOs. One cancels the other. If I sell it here, or well, it would be here, then the stop is automatically canceled. One cancels the other. If it were to go against me, let's say it goes like this and then it goes boom, then I sell out at my stop and then my limit is canceled. There you go. Yeah, I remember him saying that. Well, yeah, automatically, Sandy. Yeah, but as soon as one triggers, the other one is canceled. Absolutely. Um, so what Michael Jordan's saying there, and this is another, I listened to a guy, um, uh, Darren Hardy. Darren Hardy used to be the editor of Success Magazine. And all he did for years as the editor was interview the most successful people in the world. And that's right, Sandy. And the common thread there again through all of those guys is they all said the same thing. Never be afraid to fail. That again goes back to the paper trading account. Embrace your mistakes. Mistakes have tremendous value in the paper trading arena. Why? Because you don't want those mistakes to continue. You want to make sure they don't become habits, and you do want to make sure that you don't do those same mistakes in your real money account. Embrace the mistakes, look for them, journal them. This is how you will learn and get better as you go on in time. That's how. Then all these guys, Jeff Bezos, all these guys, they'll tell you they failed miserably. They had dozens and dozens of businesses that failed miserably. And they all embraced them and used those experiences to allow them to get to where they got to. That's part of the deal. I know it sounds weird, but it's true. Absolutely true. Failure is going to happen. I've heard people say, I said, well, you lost money on that trade. Yeah, the market's choppy. Market's this, market's that. Squirrel, dog ate my homework. Too many squirrels in the trees. No. Listen, if you take a trade and it doesn't work, right? Let's say you take a flag right here and it's oversold and everything looks good, it's in trend, and it breaks out and it goes bloop. That's part of trading. All the boxes were checked. It's a very good high probability setup. Some of them are not going to work. I call the best trades A plus. This was an A plus setup. It did work. But if it didn't, that's part of trading. That's okay. You entered, you checked all the boxes, you had the stops, it was the correct trade. Everything was correct. Now, sometimes you take a trade and it's not correct, right? let's say you get in here. Let me get rid of this mess. And I'm just going to make this up. Let's say you get in, let's say you see this and you say, hey, this is a pullback flag. I'm not going to wait for the entry. I'm going to get in here, which is incorrect. It's wrong because I want to save a little bit of money. And then boop, you lose money. That's a mistake. You got in at the wrong time. Or let's say you bought too much or you bought too little, right? All these kinds of things, they're mistakes. That's a different story. You shouldn't have entered there. You should have entered here, but there was no trade. So this is a mistake. This should go right into your journal so you don't make that same mistake again. That's the whole idea. Some are going to lose even when they're correct. That's part of life, part of the trading life. But when you enter incorrectly, trade size too big, trade size too small, you didn't check the sector, you didn't do this, you didn't, whatever it is, whatever boxes weren't checked, that's a mistake. You got out too early, right? That could be a mistake. You got in here and up here, and you get up here and you say, "Holy mackerel! I don't think this trade can go any higher." So you sell right here, and then you look at it 5 days later, and you're like, "Oh my gosh, I could have sold right there." That's a mistake. You didn't trade on the chart. You traded on emotions. This goes right into the journal. That's what paper trading and journaling are all about. That's the bottom line. Sorry, guys. A bit of a rant, but I see people make these mistakes over and over and over again. They get in here at the wrong time and they say, the market's too choppy. Or they say the same thing, the market's too choppy. Or they say, I got nervous. Or they say, I asked them, why did they buy here? And they said, I had a feeling. We don't trade on feelings. I tell them all the time. I said, that wasn't a feeling. That was indigestion. Forget the indigestion. You got to trade on what you see on the chart. All right. So this is the only way to get better. This is how Michael Jordan got better. He practiced and practiced and made mistakes and fell down and missed shots and guys pushed him over. You know, Michael Jordan, come to think of it, was cut from his high school basketball team. I remember that story. And when he was inducted into the Hall of Fame, he invited his basketball coach, the one that cut him from the team, and wasn't kind to him when he had his speech. Um, so, crazy things can happen. But the bottom line is he continued, he never stopped, he continued to grow and get better. And this is one of the biggest ways to do it. Learn from your mistakes, put them in a journal so you don't forget them, review your journal, and you should escalate your ability to get better and better all the time. Okay. Sandy, keep track of those mistakes and it helps so much to learn. Yep. You win or you win or you learn. Yep, absolutely. Absolutely. No doubt about it. All right. Um, so questions, guys, after that kind of rant. Let me rest my voice for 2 minutes here. Any questions, thoughts, ideas? I mean, I'm glad for the feedback, guys. Very good feedback. Questions though, all good questions. Don't be afraid. Throw those questions in here. All right. So, again, guys, as far as the market's concerned, right? What do we have here? Is this surprising in a big way? No. This is SPY. This is the S&P 500. This was the all-time high. Well, the chart went away, but this was the all-time high. This high was only less than $1 away. But what happened when we went up here? We tried to get through this resistance area. The all-time high was the resistance area. This is where sellers were the strongest. They stopped this big trend from, ooh, not that big trend. Stopped this big trend from moving all the way up. It stopped it right there. Sellers are still here. You could see it clearly how many times the SPY tried to get through this area. I think it was 7 days, counting this one, starting with that one. And what was the stochastic doing? Screaming lower, showing weakness, and then eventually the market followed suit. Right? Overbought, overs be careful. Overbought at big time resistance, and always look at the direction of the stochastic. Boom. Now, will it hold on to 50? We'll see. It may. But remember, tomorrow, big time, big time news. What is it? Non-farm payroll. NFP. Non-farm payroll. Comes out once a month, 8:30, first Friday of the month, Eastern. It shows how many uh, people were added to the payrolls across the country, minus, not counting, farm workers, which I never completely understood. Um, so it's a huge gauge of the strength of the economy. This is what happened last month when the number came in very weak and the market started thinking about a recession, which nobody wants. Nobody wants a recession. And it scared a lot of investors. And then, like the market does, I don't want to say often, but certainly no doubt from time to time, it overreacted. And then buying came in. Hold on one second, guys. Sorry. Oh. Um, it overreacted. And then buyers said, you know what? The market overreacted. There was no reason for it. And then buyers came running in, but then could not get above the all-time high. And then sellers, boom. Where do we go from here? Tomorrow's a big deal. Tomorrow is a very big deal. Tomorrow is, well, we know it's non-farm. Well, now we know that. Non-farm payroll. Well, let me just bring that up. So not only will you get non-farm payroll, but you'll also get the unemployment rate, all this great stuff right here. Average um, hourly earnings. Average hourly earnings. Okay. Non-farm payroll, the unemployment rate. This guy's going to speak. This is one of the Federal Open Market Committee guys who are very important. These guys set the rates. The more that'll be interesting to hear what he says right after he's at 8:45, 15 minutes after all this news comes in. So this is big time stuff. The Fed, this is one of the biggest inputs for the Fed. And remember, as I've always said before, people say, when a number comes out, people say, is that a good number or a bad number? Well, here's how you know. Look and see how the market reacts. Then you'll know if it's a good number or a bad number. If it's a good number, the market should probably go higher, might even scream higher. Maybe it breaks out through that resistance, although that's probably 2 days away. But if the market tanks again tomorrow, then for whatever reason, people want to try to figure it out. Is it good for the economy? And if the number comes in low, that means the economy might go into a recession. Nobody wants that. The market definitely doesn't want that. But if it comes in low, that should very much spur the Fed to cut rates, probably quicker than if it had come out with a higher number. So that would be good for the economy. Which way does the market take it? Well, we got to wait and see. First, we got to wait and see what the number is, and then we'll see. Uh, Oh, the Fed will be watching, Sandy. Yeah, non-farm payroll. Pfft. Oh yeah, yeah, they'll be watching. There's no doubt. Although you got to kind of wonder if they know already, but that really doesn't matter. Then the market, we don't want the market to know. That would be kind of unfair. But the Fed, they may know before we do. I wouldn't be surprised. Um, so again, don't trade the news. Trade the market's reaction to the news. That's what I have always said. All right. So questions on that, guys? Thoughts, ideas, guys and ladies? Anything? Um, so let's see. Let's take a quick look at the sectors, market sectors. This is part of my routine every day. Groups, they call them groups. What in the world is that? Thank you. All right. So utilities, um, consumer cyclical, computer defensive. This is offensive. This is defensive. Right next to each other. Funky. This is defensive utilities. And real estate's kind of in the middle. Financial is offensive and healthcare is defensive. That's about as convoluted as you can get. Market's trying to decide what it wants to do. All right. Same thing, just about the same thing right here. Healthcare is defensive. Technology is strongly offensive. Utility is defensive. Consumer defensive, of course. Consumer cyclical, offensive. Financial, I mean, yeah, this is a undecided market. Let's see what happens today. Hold on a second. Let me get rid of this mess. Consumer cyclical, consumer services, strong, strong, strong. Top three, strong, offensive. Utilities, real estate, consumer defensive, right below them, defensive. Why are these defensive? Because no matter if we have a recession on, which I certainly hope we do not, because nobody wants one, you still got to turn on the lights. You still got to go to the grocery store and you still got to go to the doctor if you need to. All right. Um, Energy's been dropping. Let's take a look at the energy chart, which could indicate a weakening economy or the thought of it. Here's crude oil. And yep, you can see crude oil here. You got some support right down here. Get out of here. Too many ads on FinViz free. But there you go. Big, big drop. It hit 85 and boom. Now it's down to 70. All right. So all this stuff is available. It only takes a minute or two. Go to FinViz, check the futures. You can check any one of these charts. You can check the news, just to be up on the news. You can go to the screener. Um, whoop. Scott's talked about screeners. You know, this stuff is good, optionable. Then, whoa, go to technical. And you've got your three moving averages here. If you want an uptrend, just go above, 10% above or just above the 20, the 50, the 200. I like to put in a pattern right here, channel up, oof, and then hover over the symbol. And there's a nice consolidation right there. None of these are recommendations. We know that. A nice run up, consolidation, and it's broken out, going higher. So this is where you want to find some setups. I mean, look, there's 6,000 stocks in the market, 7,000 stocks. I mean, we're going to look at them all? No, we just scan for them. There's a flag. That's an ugly flag. There's a flag there. All right, there's a small flag there. You just hover over these and see what's happening. Whoa. All right. So anybody, stock, anybody have a stock that they're interested in? I wrote a few down myself. Whoop. Costco, nice trend, little pullback, getting oversold. maybe for a watch list. Um, EXR, same thing. You can call this a pullback. You could call it a flag. You're getting oversold. Nothing yet. But if we get a change in direction tomorrow, who knows? Right? There's a pullback flag, or you could call this a regular flag. You got a pullback here, sitting above the moving average. Nice trend. Apple. Everybody knows Apple. So we have a little pullback beginning here. We have a lower high, but we do have right here, we have two. I always require three. Bouncing off the 50. If we get another one here, and if we can get a little something here, and then a breakout, we could might turn into a long trade. All depends on what's happening tomorrow. Yeah, everybody likes Apple. There's no doubt about it. All right, I got 2 more minutes. Let me just see. Gold. Gold is this is one of the golds. Looking, whoop, get out of here. There's a little pullback in gold. All right. High or low on the moving averages. Oversold. Watch lister. No, Sandy, I trade charts. Right. So it's always good to be diversified. I trade charts when I have a list. Everybody should have a list. Um, so I looked at 3M. Beautiful trend, little pullback. Not enough pullback on the stochastic yet. All right, guys. It's time for me to move along. Scott's on his way. And I'll shut off my mic, move along. And always a pleasure. Thank you guys and girls very much, ladies, for showing up tonight. Always a pleasure. All right. Yeah. You too, Scott. Take a little intermission here. 5 minutes. Turn my screen on. Glenn will probably stick around. Glenn, you want to shut yours down and I'll turn mine on? Yeah. So he sticks around for about 10 minutes or so to the top of the hour. So if any questions are lingering, you have the opportunity to address them directly as before he leaves. So we just wanted to make sure you guys were aware. He sticks around, watches, and so if there was a discussion going on that you wanted to continue, he was out for another 10 minutes or so when we get going. So we'll pick up here at 8:50 p.m. 4 minutes. I'll see you in just a minute. I can make this work.